Jane Death with The View from Dale Farm. Now, this weekend, Europe's leaders meet again to try and sort out the euro crisis. But today, one of Britain's leading businessmen has come up with a rather novel solution. Lord Wolfson is offering £250,000 for the best plan on how to safely exit the euro. I'll be talking to him shortly.
But first, our economics editor, Faisal Islam, has this special report from France, the country that's supposed to be funding any bailout, but is itself coming under increasing financial pressure.
Made in France and grown in France. The finest produce from Burgundy at this farmer's market. Even the euro itself is a French invention, though it's no longer looking so fine. La Belle Vie, the French good life, France's triple-A lifestyle epitomised by fabulous rural produce and the odd highly subsidised cow. It's underpinned France's role in supporting the single currency and writing some of the checks in being the second power of the euro. But what happens if this country needs support, needs to receive some of the checks? The whole euro bailout becomes in peril. The market bonhomie defies a stagnant economy and looming tax rises. Financial markets and the French people beginning to doubt whether France itself is strong enough to mount a grand euro rescue.
We need to work together to keep the high debt nations afloat. But we in France might be in trouble too.
We're a bit worried. We just have to let the storm pass. But the euro must stay, whatever happens.
Europe's plan to prevent catastrophe due by Sunday. Meanwhile, the epicentre of this crisis has moved from the Eurozone periphery, Athens, to its very core here in the financial district of Paris, the headquarters of France's banks. Their share prices have crashed alongside their credit ratings. The fear that Greece doesn't repay its debts and other nations follow suit. The French banking system poured tens of billions of euros at very low interest rates into the governments of Spain, Portugal, Italy and Greece. And if Greece can write off up to 50% of its debts, that could leave a huge hole in the French banking system that needs to be filled by someone. By happy coincidence, in this room in Paris are the people who control a total of $9 trillion of funds on behalf of the world's governments. That's oil money from Gulf nations and Norway, money from China, Singapore, even Kazakhstan. The so-called sovereign wealth funds are in strong demand here and could play the crucial role in bailing out the Eurozone and its banks, and none more so than the China Investment Corporation and this man, Chin Li Twin, its chairman.
You're very popular here, aren't you?
I hope so. I hope so. You talked about investing in the European banks. Certainly the bank shares are very low. You talked about investing in some of the companies whose shares are very low. All these are very, very attractive. If the investors are confident that this is a real picture, there are no black holes.
The axis of world power is tilting. These days it's the Chinese worrying about black holes in Europe. Christian Noyer, the governor of France's central bank, told us that his banks were fine, but they might need some funds. This sovereign crisis may impact upon France's banking system. Are you confident that it's strong enough to withstand any further sovereign defaults?
Oh, absolutely. I think these have been very much overstated. The exposure of the French banks to peripheral sovereign debt is 60 billion in general. It's only a small fraction or limited fraction of their own funds. Of course, it will be up to them to find out whether they have to or are willing to raise more capital in the market. And certainly, sovereign wealth funds could be, in some cases, an opportunity. It will be up to them to see that.
It's not just Europe's banks, but European lifestyles that are making the Chinese doubt their investments. It's the very essence of the generous French-style social welfare systems that underpin La Belle Vie, which are the problem.
The root causes of trouble, as I said, is the overburdened welfare system built up since Second World War II. In Europe. Overburdened and the sloth-inducing, indolence-inducing labor laws. People need to work a bit harder. They need to work longer, and they should be more innovative. So,
a bit more like the Chinese.
I hope so. And we work like crazy, you know, and And then as I said, the European countries enjoy a lot of advantages in science, technology, in managerial expertise. European countries have a lot of advantage. Just tap these advantages. And then, you're back on your feet.
That message, a rather tough sell on the streets of Paris.
And we associate France with the good life, the crémant, the foie gras.
People don't want to have to choose. They had at one time a very good level of life, and then maybe because of euros, the level of life is decreasing. They don't want to go back anymore. They want to spend, to have more and more. It's French mentality.
But this producer of gourmet butter did agree with the man from China.
Le coût salarial coûte cher.
It is expensive to employ people here. In other countries, they have lower taxes on jobs, and that makes their products more competitive.
For the Shakespearean scholar who chairs China's piggy bank, a debt-soaked Europe needs lessons, not just money, from his rising nation.
To borrow or to lend is all right. Don't do it excessively.
China's money man sending a poetic message to a debt crisis-ridden Europe, and not just about its finances.
I will work harder.
Okay. You already work very hard.
Faisal Islam, Channel 4 News, Paris.